Good afternoon, everyone, and welcome to the ATOMO Diagnostics FY20 investor presentation. My name's Gabriella Hold and I'm an Account Director at IR Department, and it's been a pleasure to support ATOMO with its investor relations efforts over what has been a very strong period of growth for the company. It's also a pleasure to host this investor briefing today, which marks ATOMO's inaugural full-year results as a listed company following its April 2020 IPO. Presenting today will be Managing Director John Kelly and CFO Will Suter, and they'll be presenting from the deck that was lodged with the ASX this morning. The presentation will take about 30 minutes, and that'll be followed by 15 minutes of Q&A. And you can ask a question at any time by using the Q&A function on your screen below. We'll endeavour to get through as many questions as we can in the time allocated. Yeah, so now I'd like to pass over to Managing Director John Kelly. Thanks, John.
Thank you, Gabby, and thanks everyone for taking the time to come and find out a little bit more about ATOMO. As Gabby mentions, we'll have some questions at the end, but hopefully the presentation will answer a good portion of your thoughts and questions. So, in recap, it's been a very good initial coming to market for us. We're very, proud for the results we've been able to put out, and we're very excited about the opportunity and the journey for the business through this coming financial year. We're an Australian business. We're headquartered here, and we're, however, globally focused in terms of our customer base, our operations, and we have a number of executives around the globe helping grow the business internationally. The technology's gone past the R&D phase. We have regulatory approval. It's very well validated by customers. It's well accepted by regulators, and we're now starting to see significant commercial traction, initially with HIV, most recently with COVID, as well as a whole pipeline of OEM contracts, some secured, some still pending, as we roll out the cassette across multiple applications. We've been able to report strong growth in our revenue as the products for HIV and COVID have come to market in this financial year, and we expect to see very strong, sustainable growth through financial year 21 and into the future. And we're very excited to have been able to list earlier this year and move forward with a strong balance sheet and a good market capitalization. In terms of progress over the last 6 months, primarily 2 main focuses. The first one was getting listed, getting access to capital, and being able to sustain the long-term growth of the business. And we did that very successfully through a fairly turbulent time in the market. We've also been able to pivot very quickly to the opportunity presented by COVID. We've secured 2 very substantial agreements. The first one was with NG Biotech back at the end of March, and we have launched successfully with them in Europe, primarily in France, although we're in discussions with extending that agreement to other markets in Europe beyond the end of this year. More recently, we announced an exclusive partnership with Access Bio, one of our existing customers, for North America, and that application for COVID would see them commit to a take-or-pay contract for 2 million devices in the first 12 months, and then a rollover mechanism that would see a second 12-month period with an additional 2 million units committed through that process. So we're very excited about that. That's a very material contract, not just in terms of revenue for us, but also the first sizable product to market for us in the US in a meaningful way. And that comes with co-branding, which helps really start to promote ATOMO as a delivery mechanism for better testing, not just for COVID testing. And most recently, we secured a TGA approval here in Australia for the product where we're the listed manufacturer, and we're now actively looking to roll that product out. We believe it's the best-in-class product available, and with us being a listed Australian manufacturer, we're very bullish about the opportunities here, both in the private sector, with corporates, as well as public health providers. To support all of that growth for COVID and other applications, we've been very focused this last period on scaling up our capacity. We come into this pre-IPO period with about 300,000 monthly capacity of total cassettes. We're now, as of this month, at 750, and we're going to continue to scale through to beyond 1 million per month by the end of this year. And we think that that will give us significant capacity for demand in 2021. We do have the ability to scale beyond the current levels should demand continue to present itself. And we also have an option for tech transfer to certain partners at certain volumes so that they can start to manufacture under license potentially moving forward. So we don't think capacity, while challenging to get capacity, it's certainly not limited by any number, and we can continue to invest in further capacity as we see fit. We're starting to see some traction in sales, and we'll talk about our performance, both in terms of P&L and balance sheet. But for me, the most important thing that sits beyond the revenue is the improvement in gross margin. That reflects the premium we're getting for COVID, and also reflects, I think, the scaling up of the business and the moving to better economies of scale in our supply chain. And we would be hopeful of continuing to see improvements in underlying gross margin moving forward. We've seen obviously EBITDA operating losses come down, and we're very encouraged by that. And we think that that pathway to profitability is now very clear. And with debt paid off, we've got a very healthy balance sheet and plenty of cash on hand to help grow the business.
So just a quick corporate snapshot. As you all know, we listed on the 16th of April, and there's a short history on the screen there about our trading. It's been interesting. It's been turbulent times for the whole market, but we've been very well supported and are significantly above our IPO price of 20 cents. Most recent close at 44.5 cents with 560 million shares on issue gives us a market cap of $250 million. There's a number of strong shareholders that have supported the company, both pre-IPO and at the IPO, and they continue to be strong supporters. And we've got a very experienced and well-rounded board that sits behind the company and provides additional corporate governance and oversight. So, you know, we're in great shape going into FY21 from a corporate perspective.
Next slide just reiterates the unique position of ATOMO'S products in the market. The vast majority of the lateral flow market is delivered by products that you see on the left, which are essentially sort of year 12 chemistry set, experiment type applications, bits in a box, no real usability, and as a result, you know, underwhelming for users, struggle with regulatory approval, and have limited success in certain markets. And what ATOMO has done is really integrate all of those usability challenges down into a single fit-for-purpose, consumer-friendly solution. And in consumerizing rapid testing, we really open up a lot of longer-term opportunities in home health, improved point-of-care testing in doctors' offices, and we think our technology is going to be very disruptive in essentially converting that bits-in-a-box market over to something more fit-for-purpose and more consumer-friendly. And we've been able to very successfully deliver different chemistries onto our device. HIV was the first. We've proven with the rapid pivot to COVID that we can go from an inbound inquiry to a finished product within 10, 12 weeks, because the device doesn't need to be changed, and the test strip that goes onto our device also typically doesn't need to be changed. And that means that we're now very flexible to expand across all the various applications for lateral flow. And we'll talk a little bit later about, you know, what the breadth of those applications, the ones that we're getting very excited about. In terms of the business model itself, we've got two complementary business models because they both use the same base technology. The one on the left is the ATOMO finished product business, and that's where we are the listed manufacturer, and the first product to go through that business unit for commercialization was HIV, and we've done that very successfully to prove not only the utility of the device, but to prove that ATOMO can bring products to market successfully, get regulatory approval, and get market share. And off the back of that, we've been able to enter into some long-term HIV supply agreements, including with Mylan Pharmaceutical, a global leader in HIV drug delivery. They've got half of the world's generic drug business and a very good natural channel partner for us in more than 100 markets. And they're actively selling in the first tranche of countries, about 10 to 15 at the moment, with applications pending for more. So that's an ongoing rollout, and we do expect to see over the next 3 to 5 years a solid, steady growth in our HIV business as global health transitions more to self-test applications. We will, with capital and resources, we'll look to bring more of our own products to market similar to HIV, and we'll talk a little bit about that later. But outside of our own products, we see a very large and scalable OEM business for the company, and that's where we provide our assembled device to another diagnostic company, and they can put their own test strip in there and launch their own product with our device. Some important aspects to that. The first one is that customer is tied to ATOMO because their regulatory approval is dependent on our device. So we have a captured customer for the life cycle of that product, and you know, medical device life cycles are typically long. You know, we have some contracts that run up to 15 years. And the other benefit of that model is that we're not responsible directly for regulatory, clinical and go-to-market costs. So it's a cheap carry for us into the market. And we see that as a good pivot to the ATOMO business, where we can selectively launch our own products or alternatively look to license and partner with established diagnostic players and other channels. The journey to date, we've been going 10 years now. The first 5 were very much focused on intensive R&D, in-field usability, product validation, making sure the product really was best in class. More recently, the transition has been to commercial rollout. So a lot of support along the way from the Global Health Investment Fund, the Bill and Melinda Gates Foundation, and several grants from both the Australian government as well as support from the Canadian government. And with that capital, we were able to launch the product in South Africa for HIV, get regulatory approval. It's only one of 4 products that's ever secured pre-qualification by the World Health Organization. And it's the only HIV self-test that the Australian TGA has approved. And that really speaks to the best-in-class usability that we deliver. Off the back of those approvals, we were able to secure partnerships with Mylan in Europe or in Mumford. We've launched directly to market here in Australia for self-test. And off the back of that HIV success, we've been able to then roll out OEM contracts and then more recently sizable growth for COVID. So we're really starting to see that recognition of the platform as being best in class, being disruptive, starting to get globally recognized. And we think now we're in a very good position to push on and really grow the business from here. The HIV business has come up quite recently. COVID has come up quite recently. Firstly, Access Bio, after we did the deal with NG Biotech, and then the local approval for TGA. So we're very bullish about the opportunities as we roll into this financial year. We still haven't seen the Access Bio product launch. They're going through FDA approval. So that revenue will be on top of what we've already reported, as will sales that we look to make in the Australian market as well. We think that antibody testing for COVID is here for quite a while. And we think that antibody testing in particular sits alongside antigen and PCR testing in the lab. It's not instead of lab testing, it's complementary to it. And the reason for that is that antibodies build up over a 14-day window, which means that the test really isn't suited to rapid detection of infection for people who have got sick with immediate symptoms. But what it does do much better than lab testing or antigen testing is it provides a long-term measure of antibody response. And that's critically important for return to work. That's critically important for travel and validation of vaccine effectiveness. And that's a market where antigen testing and lab testing can't compete, because those tests actually start to lose sensitivity after a couple of weeks as the virus leaves your body. And those tests will not tell you if you've been exposed 6, 8 weeks, months later. So we think antibody testing is really here to stay as part of the response to the pandemic. And we're convinced that our test has benefits that other tests on the market don't have. The assay with NG was validated by the Pasteur Institute, which is the French National Reference Laboratory. It's been sold to the French military. It's been sold to the French public healthcare system. It's the only test that's been validated and launched on our device, which is award-winning, unique, and the only device that's been approved for self-test use in Australia. So it really does make this product best in class. And we feel that it will be the market leader over time, particularly in point of care and self-test applications. And we're very focused on making sure that our test is the first or one of the first to market in those segments. Before COVID came along, we were coming to market primarily to scale up our HIV business. Mylan remained committed to the long-term rollout of the product globally. We also have partners in place in Europe, and we sell directly in Australia. That business is not growing at the same rate as COVID, but we do see it being a long-term sustainable year-on-year growth driver for the business. And we're still very bullish about the opportunities for HIV over the longer term for the product and for ATOMO'S revenues. Outside of those 2 initial flagship products, we do have an OEM business that we're very excited about scaling. As I mentioned previously, it's quick for us to find new customers and scale new customers. We don't have a lot of go-to-market costs. One of our limiting factors really has been capacity, and we've been very mindful of that and bringing on capacity as quickly as we can. Mindful that it needs to be validated and regulated, so there's a limit to how quickly we can bring on new capacity. But we've doubled our capacity quite successfully in the last 4 or 5 months. We expect to double it again at the end of the year. So that capacity will be coming on through the year, and we'll be able to then bring new OEM customers on. We've already established an ability to demonstrate good usability for our OEM customers. Lumos have launched a product, Febridex, that's CE marked in Europe, and that's a test that distinguishes between viral and bacterial infection. So it's very good at managing the overprescription of antibiotics, which is an increasingly large global health problem. On top of that, they've now got some very good results showing that they can screen for COVID, and they're being looked at by the NHS for a contract. So we're starting to see some sizable demand coming through the system from them moving into next year, as well as a whole pipeline of new potential customers and applications that we really just haven't had the resources or capacity to deliver. And we think over the next 12 to 24 months, we would expect to see quite a few of them coming to market on the platforms. So progress through this year, we've already got off to a good start with the securing of some milestones on COVID. We've announced our capacity increase being validated. We're very bullish about the opportunities in North America and locally here in Australia for the COVID test. And we do expect to see non-COVID business starting to scale up in parallel. We're not just certainly a COVID business. Our additional capacity will continue to increase. We'll be looking to get over 1 million units per month by the end of the year. And as I mentioned, we can certainly scale beyond that if we see demand to support that. We're increasingly mindful of the size of our US customer base and the large percentage of OEM opportunities that exist in North America. And to that effect, we're looking to now move to the US with a business unit to set up some dedicated resources there, some commercial and operational capabilities, so we can really be active in the US market and tackle those US opportunities head on and deliver a lot of growth out of that US opportunity. To support that, we'll be looking to bring to market the next ATOMO product, and we'll talk a little bit about what sort of channels we think are attractive there. But we've got a range of platforms that support our own products. Elion was the next generation self-test platform that we developed under the funding from the Gates Foundation. It really is best in class, and we'll be looking to launch that for OEM customers later this year. And we're starting to work on a number of digital health solutions, both clip-in readers for doctor office applications as well as a home-based app. And we think that e-health will be a continually evolving part of home health, and telemedicine is here to stay. The pandemic has only reinforced the need for us to be a market leader in the delivery of home-based e-health solutions. Our more strategic priorities, I think, beyond this year are to continue to really grow a sustainable footprint in the market with really credible blue chip partners that we can rely on for long-term business, to make sure that our COVID and HIV businesses are executed well so that the revenue can continue to generate, and that the manufacturing capacity is there to support that opportunity. And we're also looking to bring on additional capacity so that we've got extra availability for new customers who are interested in the product, and also for our own production of new tests. And the areas that we're really focused on are areas where the usability of our device adds specific value to those channels. We're thinking high margin doctor office applications in North America and Europe, and consumer health, which is a very emerging channel, particularly in North America with OTC, over-the-counter testing products. We feel our device is uniquely positioned to be a market leader there. We're mindful that lateral flow, the technology that we wrap our solutions around, has been around for 20 years. It's off patent. It will at some point get disrupted by newer technologies. We're actively working with some startups in the US that are looking at developing newer type of technology solutions that we can help commercialize and bring to market. So we'll be looking to be active in disrupting the lateral flow market rather than sitting waiting for somebody else to do it. And to support all of that, we're looking to continue to build within reason a scaled footprint that includes some additional technical expertise, some additional infrastructure around capacity, and also some operational expertise in North America. We're just going to talk very briefly about the range of applications open to us. Lateral flow is very commonly deployed across many applications. It's a $5 billion market, and that was before COVID. We think COVID's grown that market pretty materially. A broad range of infectious disease applications, thyroid and other hormone markers, increasingly used for cancer markers, cardiac applications, liver, wellness, vitamin deficiency. There's a whole range of applications, and all of those applications are limited somewhat by the usability of the solution, certainly within the consumer segment. And we feel our device really can revolutionize the deployment of tests into that channel. And that's our goal, is to be the market leader in that channel. And as I mentioned, we think eHealth really only helps support that deployment. And we're very active on looking at bringing some supporting eHealth technologies to play in the market. The whole business is underpinned by a lot of investment in expertise around not just the design of the products, but manufacturing. We have 5 patent families pretty broadly granted globally. And we've got those patents granted at what we feel is a fairly deep level in terms of patent coverage. On top of that, a lot of proprietary know-how has gone into how we make the device. We've got our own manufacturing machine for blister production automated in the US. We've got 2 more machines on order. We own those machines, that design, that process, that IP, and we feel it's a very difficult product to reverse engineer or enter the market with a me too. And we think our market leader position is now hopefully well protected in the market, not just by the technical protection we have, but also by the credibility of our solutions and the partners that we've been able to tie into our supply agreements.
So just coming to the results now. So the chart on the right, I think, tells the main story, which is obviously a significant jump in revenue, 10 times FY19 and nearly 20 times FY18. And I think that reflects, obviously, the fact that the business was just getting started in those years and just commencing the rollout of the HIV product, in particular with Mylan, and just beginning to start some of the OEM contracts. And clearly, as we've rolled into FY20 and Mylan started to roll out internationally, we then obviously had the big kicker from COVID in the last quarter. So that's really given us the launch pad that we needed, and that's reflected in our full year revenue of 5.37 million. As John mentioned, it's also enabled us to achieve the economies of scale that we were looking for. And so from an overall gross margin perspective, the company's significantly improved its position and brought the gross margin levels up to 60%. What that means when you flow it all the way through to the underlying EBITDA is that the position is a loss of 2.38 million, which is about half where it was last year. When we came to market at the time of the IPO, we were talking about moving towards profitability in the kind of 12 to 24 month period. But I think the injection of additional business through COVID-19 has given us the chance to pull that forward into the FY21 year. So very exciting from a P&L perspective. A continual kind of diversification and deepening of those different revenue streams and product streams should see us continue to grow into FY21 and beyond, and continue to maintain those kind of margins as we move forward. So the balance sheet obviously vastly improved. At the beginning of the year, less than $2 million in cash and $10+ million in debt to the Global Health Investment Fund. The IPO has enabled us to repay that debt, and the increase in the trading position has enabled us to really stabilise our cash position and puts us in great shape for investment in the coming year. The working capital of the business has obviously grown as the revenue's grown, particularly coming in that last quarter. And we'll continue to invest and use that capital, as we intended to at the time of the IPO. In particular, growing, the depth and breadth of the product offering, growing the manufacturing capability and capacity, and setting us up to really grow beyond where we are right now and into FY21 and 22, and execute on some of those growth opportunities that John described.
So by way of investment sort of summary, it's a proven technology, it's truly disruptive, it's unique, and we've got very good proprietary and IP protection around it. We're now establishing ourselves, I think, as a market leader, certainly when it comes to disruptive usability in markets that appreciate the importance of usability, and that really is for the consumer health segment. Very exciting. The product's best in class. We've proven that with HIV. We've proven that with the rapid pivot to COVID. And we have an exciting range of applications that we want to target either directly or through OEM partnerships. And that gives us a good opportunity to disrupt a number of segments within that lateral flow market. And we think, in several of those, we would hope to become the market leader. The platform's proven now is versatile. We can adapt it to a very broad range of blood-based applications very quickly and reasonably cost effectively. We've proven we can manufacture at scale and low cost, which gives us good margins. And we've got the proprietary know-how to not only manufacture it, but to scale it, and if we choose to license it out to others to manufacture on our behalf. And most excitingly, I think, from my perspective, is that we're now really ready to jump beyond COVID and HIV and start to pull in other applications that we can own. And we think that's where a lot of the growth will be in the next 3 to 5 years. We're very excited about the journey, through this year and beyond that we're now ready to make.